the one of learning how to day trade. It's actually like day five because I've been on it for like a month or two now, and I took a break for like 5 days, kind of, because I blew my account, I blew some of my account, so I took a break. So right now I'm back again. So if you come across my channel, just subscribe, like the video. That's just it.
They need another correction. They need to get grabbed for more money, which is why you see price sell down, because that's only buyers collecting more money to come back up.
And if you
So
want
this
to,
is where we
if you
come
want
in,
to know,
right? Because we
if you
know.
want to check the
Think about it
person
like
I'm
this.
learning from, you can check his page
Buyers
out
came up
on
with 4, right?
IG and
They
yeah,
came up with
yeah,
4.
on YouTube
Seller
as
said,
well.
no,
His
you
name
need
is
20.
Trade
But
by
we'll
Side.
take this 4.
You can check
Just
Trade by
go get
Side
us
out.
16 more,
Um,
and we'll let you through, right?
with
So buyers are doing that. So when
with
price is correcting,
his strategy,
in your
ICC
mind, you
strategy.
should
So
know that buyers are
that's
just
just
looking
you can
to
check
get that
him out.
in, right? It's like,
actually a great
have
guy.
you ever
He
been
won't charge you for
at
anything.
like a
It's
store
actually
or
free.
something, and they're like, oh, you just need, you're a little bit short. You're like $2 short, and you're like, oh, let me go back to the car and grab $2. I have $2 in the car. What do? You paid the first 20, or you paid the first $4, but you still need 16 more. So you're like, okay, let me go back to the car and let me go grab it. We know you're coming back. So we know you're coming back. So when price is doing all this, when price makes the high and it's selling off, and people are scared and they think that it's selling off to go down to hell, that's not the case. Price is just pulling back to grab more money, so that way when it's coming back, it can pay for it in full and go for more, right? And go for more. So that's all a trend is price. It goes up, tests the water, sees how much everything costs. Once it sees how much everything is cost, so it'll go up, see how much everything costs. Okay, it was $20, I gave them 4, let's go back for 16. Come back, we got 16, let's say we got 18 this time, right? We go back up, we brought $18. We give the sellers the 16 that they want, take them out, and we keep going. Right? And we only have 2, so next level of people, we're gonna need more money. And that's what a trend is. That's what the higher high and the higher lows is coming from. It's all a trend. Everything is a trend. Price is doing the same thing, but it's trying to elevate every single time. It's leveling up every single time. So remember, trading is giving something to someone for something else. Right? We're giving our buys to the sellers for a pass through. Vice versa with the downtrends too as well. So I'm not going to explain the downtrend part, but the same way with a downtrend will be the same thing. So once again, let's take this out. Remember, trading is trading something for something else. So if we're taking our buys up, we're giving it to sellers. So if we're selling, we're taking it to where buyers are at. Have you ever seen a support? This is as low as it can go, support. This is the support line. Like, there's no other hope after this. If it keeps selling, it's just gonna keep bleeding. So think about it like that. Whenever you think of sales, think of blood. Bleeding is bleeding. Nothing's good. So you need a support line, you need a doctor, you need something to keep it up, keep it afloat, right? And buyers are gonna be the ones to keep it afloat. Remember, let's think about a business, right? A business is basically investors or people investing into, like, let's think about investors, right? In order to keep a company afloat, there has to be customers, there has to be investors, right? So if a business doesn't have any customers, it's going to go downhill, wasting money, losing money. But there can be investors or some support, some buyers to buy back in their price, so buy back in their business, and this is what makes the bounce, right? Or price tries to bounce off of here, makes a lower high, and it just falls through again. That money wasn't enough to hold up, right? So support is always like, buyers are needing, hey, if you want to keep this business afloat, they're basically paying the bill. So this is the business going downhill. The business will come to the buyers. So buyers are here. The business will come to the buyers and tell them, hey, we're down $4,000. We're down $5,000. We're gonna need $5,000 to keep this afloat. Buyers are gonna be like, okay, just give me whatever you have, and we'll pay for that and push you back up. If not, if they don't want it, if buyers don't think the company or they don't think that it's worth it, then it's just gonna keep pushing down. Because remember, everything in the market wants to go up. Remember this. Everything in the market wants to go up, right? Everything in the market wants to go up. Everything that you trade, it wants to go up, but do the economy see the value in it? That's what you're trading. You're trading if people actually see the value in what you're trading. So if you're trading gold and it's going down right now, people just don't see the value in gold right now. If it's going up, people see a lot of value. That's what gives things price action. So that's why I always tell people, trade things where people want to see value in it. Trade things where people find value. Because that value brings volume. So a value brings volume. Volume brings money, right? That's where you're gonna make your bread and butter. Trade things that have value towards them. People find a value in it because that's gonna give you volume, right? And if it's going down, that means that people don't see as much value in it right now and they're selling it, right? So you need to find, levels where you can take advantage. You can always take advantage of sales too as well. Don't get me wrong. It's not always trying to buy price. If you think price or if you think people are losing value of something, sell it, right? And there will be times where you see lower highs building up. And if price makes a lower high, what is going to make next? A lower low. So when it comes to all this, I try to be very, very patient with things. Like right now on gold, we can break down gold right quick. Right now on gold, as you can see, we had price going an uptrend and then it made a lower high. This lower high ended up selling off completely. There is no correction that was made to make me think that, it's good to sell down here. Why would I sell at a lower low? Once again, why would I sell at a lower low? The daily time frame is showing me one structure. If I jump on the 4 hour, it was showing me another structure. And then if I join on the 1 hour, it was showing me another structure. So daily, 4 hour, 1 hour. Now you see how when I went off the daily, it ended up making me wait longer. So this is what I'm talking about when it comes to trying to trade on that 4 hour and 1 hour time frame. That's where you'll catch the most moves when it comes to swing trading week to week basis. So you can catch like 1 or 2 moves per week. Really like 1 move. 2 is like a good week. You can definitely catch it on the 4 hour, 1 hour. So 4 hour, 1 hour time frame for 1 to 2 trades a week, right? This is what's going to get you right. This is going to get you like 1 or 2 trades per week, possibly, right? One's really good. The daily time frame is where I'm at this point. I've been trading off the daily and the 4 hour time frame due to those moves that I wanted to catch big moves. I didn't catch this right here, this sell off here. I was a little bit too late on that, but it's okay because the daily time frame has a new low. Now, since it has a new low, I'm looking for a correction. Now, will it happen in the next day or the following day after that? No. This is something that takes time. But what I do know, the information that I have collected, is the fact that price came up high, sold off, had a level of support, broke his level of support. This is price making this indication towards the downside. Now, any movements up, I'll be monitoring it, watching it come up, and then waiting for that push back down because now I know exactly where price is going. Price came to here and buyers were like, okay, we'll keep you afloat. We'll give you this much money. It gives the market, so let's just say gold, it gives gold, let's say and this number is just for an example. It gives gold $5,000 more, so 5,000 more to use to keep the metal afloat, right? So they give them 5,000 more. And once again, this number is just for an example. They're probably like 5 billion or some shit. But buyers give gold 5,000 more to keep the markets afloat. Now it is up to gold to build up off that structure and see if it's going to go on an uptrend. Because remember, everything in the market wants to have value and it wants to go up. But can it? Right? So market was given 5,000 to keep this afloat. You'll see some resistance, or you'll see some support kicking in. You'll see price try to buy up off of this. But if gold can't use this 5,000 for good and continue to go higher, if it can't manage it properly, then it's just going to fall down. But what it's going to do is it's going to try its best, and then it's going to create a lower high, which is what we want, and then it'll fall down, right? So with that being said, I kind of got off crazy, but those are just some simple rules when it comes to price action for me. Always trade things with value, always or never trade off of a lower low, or never trade off of a higher high. Those are two things that will put you in the wrong position. Like taking a sell down here would be very risky due to the fact that the daily hasn't had a correction. So there'll be a day where price fully corrects all the way back to like 4,800, and then you're stuck in that sell all the way at the bottom, right? So those are some things that I pay attention to. Not trading those, trading things that have value. Also looking out for whenever price makes a lower low, is trying to make a lower high. So being prepared for that too as well, and being ready. So now that we know what part of the trend we're on, we know exactly what to look for. Okay, the next couple of days we should see some green days come in, or something green come in to push price up, and we're looking for that. So when it does happen, we're on our P's and Q's. Okay, price made that correction today, boom, let's focus, right? So with all this being said, take your time. Take your time. Like, literally take your time when it comes to trading. You're not gonna, like, you'll have your moment where you make 5,000 in a day or 10,000 in a day, but if you're a beginner, it's not gonna happen this week, right? It's very rare. So get that out of your head. Take your time, be patient. Be very patient. Because this market will fuck you up if you try to rush it.
Alright, so currently it is 2 o'clock in the morning. It's literally freshly 2 o'clock in the morning, almost 3. We're coming in London session, but I don't really care about all that. So currently right now I am looking at BTC. It is looking like it's getting ready to start buying up. As you can see, price has made a new high in the market. This new high ended up going on a full correction. As you can see, there are lower highs, right? And then as we're making those lower highs, we're also making new lows. Price ended up getting to this level. Once it got to this level, we ended up seeing a full-blown high being made. So now we have a high which is above these. This is a new high. Price makes a higher low. And now we're looking for price to continue higher above here, which is going to be bullish. because it's coming off of this higher low momentum. I'm actually a little bit late because I've seen over here too as well. As you can see, when we had price selling off over here, we also had that same structure change, pull down, make a higher low compared to this one, and then build up from here too as well. So we've seen that structure can proceed to be bullish above here. So I'm actually using that same high to see this as well. So as you can see here, we got this movement here, and then we also have this movement here above this high right here. Right, so since we're above that high, I'm going to try to play that same movement again because we are back above here again. So I'm just going to try to play that same movement again and see how that plays out. But I have that in my confluences. I have two higher lows, or a low, a higher low in my confluence, and a break above 7,000 or 71,300 will definitely show that, hey, price is bullish, is breaking above the swing high, we can take off to the new high. And this new high is also a confluence for me as well. So everything is looking good for gold, or not gold, this is BTC. I'm so used to trading gold, but you can see this is BTC on the 4-hour time frame. But everything is looking good, so I'm going to see how everything plays out. But as you can see, look at that. Look at the bullish structure. That looks so calm. Like, I'm not even gonna lie to you, it looks so calm. But as you can see, we've already entered the trade. I think we're in a little bit of drawdown. We're in 19K of drawdown.
Alright guys, so I'll be giving you guys my breakdown behind BTC buys and why I'm thinking BTC buys. First and foremost, I want you guys to understand that I look at highs and lows pretty instantly as soon as I hop on the chart. It's something that I've been doing for the past 4 or 5 years now. So I've just built the habit of just already seeing it once I get on the chart. But the first thing I notice on these charts is that there are a lot of higher lows. There is a lot of higher lows being built, and there's obviously stuff here too, but the ones that pointed out to me were definitely here, and I just kind of took advantage to see if I can dig deeper into it. So as we see here, price ended up coming down to this lowest point right here. Lowest point right here, and then this highest point was created right here. So whenever price makes a low, it's got to make a high. Now, depending on what type of high this is, it could be a higher high or it could be a lower high. But remember that whenever price makes a low, so whenever price makes a low, is going to make a high. So whenever price makes a high, is going to make a low. Right? So whenever price makes that low, it's going to make a high. Whenever price makes a high, it's going to make a low. Now, depending on what the trend is trying to do will also depend on what type of high, what type of low, because, you know, we have a higher high, and then we have a lower high, so this would be lower high, and then we also have a higher low, and then a lower low. So there's 4 different types of, or there's 2 different types. So a higher high or a lower high, or a higher low, lower low. Now, mind you, going back to topic 1 or course 1, remember higher highs, so HH, and HLs only happen in uptrends, right? And LLs and LH only happen in downtrends. So this is all downtrend, and then this one is downtrend as well. So let's go ahead and, or uptrend, sorry, my apologies. So uptrend as well, so uptrend, downtrend, right? So with this being said, I want you guys to like literally just take these simple steps and use it for any time you mark up your charts, right? For any time you mark up your charts. So if we have a high, or if we have a low here, this is a swing low. Price swings high. Let's just not even focus. You don't see none of this over here. You don't see anything over here. You just see this, right? You just see this. You already got a low. Okay, that's a low. It makes a high. All right, cool. Now we just have a high and a low. That's okay with us, right? High, low. Price comes down. It doesn't go lower than this one. So now what do we have? A HL, high or low. Bing, 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 bing. This is already equaling to the uptrend. Now we just need a high, right? So boom, price comes up. This is a high, but it's lower than this one. So now we have a lower high. So now, you know what we can't do? We can't trade yet. Okay, we don't have any setup yet. We have the higher low, but it didn't fail. But then it makes another higher low. Bing, bing, bing. So right here, higher low. Means it's picking up. Still, remember, we don't have anything telling us price is going to be bullish yet, but we do have these higher lows building up. So, as you can see, price ends up breaking above this level, making a new high. So this was our lower high. Now price has a new high. This can actually be mitigated. We don't even have to worry about this anymore. If we want to, we can, right? If we want to, we can, because it's kind of almost the same level, but right here, price came up into these highs right here. But we have a new high right here. High, higher low. So now we have another higher low, another H, and we can see that price is building all that bullish structure, right? So there's different ways that you can look at it. You can look at this as that uptrend, so we have the indication, correction, and then the continuation later on, targeting these highs up here, and then targeting these highs over here. You could do it like that, or how I did it was I seen that since we're already over here, I obviously wasn't in none of this, so this is all hindsight. But if I was looking at this, I would have definitely checked this out as an indication. Price ended up making a new high, going on a correction, and anything back above this gray area, I would have been looking to buy price, because that's what price did before, right? So indications are very important because they tell you exactly where price is trying to go without you having to do too much work on, doing all that brain work, because people try to use psychological numbers, people try to use Fibonacci's and stuff like that, but you don't need to do that. Price is going to tell you exactly where it's going to go. So this indication is showing you that from 69,000 is going to go to 73,000. So your answer is already done. Where do I enter? You're always entering. So whenever you're trading, let's just put it this way, the indication, I'm not going to type all that out. The indication level is where your entry is going to be, right? Your indication level is always where your entry is going to be, right? That's exactly where your entry is going to be. Sometimes you can be a little bit late, but your indication level is always going to be your entry level, right? So your entry level is going to be this right here. Matter of fact, let me use something different. Let's just use this. Let's see. Sorry. Let's just use this right here. This blue line is the indication level. Anything above this blue line is going to be bullish, right? So every time price is above this blue line, we're looking for it to go bullish all the way into this line. So we're looking for price to come all the way up to here. This is our indication. Price corrects. Once it corrects, it comes back above. the floor. Creates a high, makes a higher low, now listen to me here, makes a lower high here, fails to go lower, makes a higher low, and then pushes up. That's okay. That's fine, right? That's fine. That's why we always, and I'm gonna show you guys later on, that's why when it comes to trading ICC, it's hard to get faked out because you need that second push around to give you that confidence, to give you that momentum. So even here, you should have had more confidence. Let's say if you took the buy trade, you should have had confidence that price just made a new high, pulled back, regained itself. So this is price coming up high, making that higher low and regaining itself. This is all regaining. Now, it would have been a different story if price came here, made this lower high, and then broke to the downside. That would have been a different story. But, price. Price didn't do that. It remained the same. Stayed and kept composure above this blue area and went back up and targeted this level right here. Right? So also another indication another thing when it comes to indications are normally going to be the start and finish of a trend. Now, what do I mean by this? Or, I wouldn't even say finish. It would be more of like a continuing thing. I wasn't number one in the spelling bee, but it's more of a continuing thing, right? And basically, what I mean by this is, for your trend to keep going, you need another indication, right? So for the trend to keep going, we need another indication in this point. So we had our indication 1, our correction, and then price pushed up, finished it out, but it made a new indication. So this is the whole thing about trends. It's going to constantly make up the repeat. It's going to be I, C, C, and it's going back to I, C, C, right? And it's just a rinse and repeat, which is why it really works a lot for swing traders because it's just a rinse and repeat, rinse and repeat. So, with this being said, you get an indication here, price corrects. So, we already have our answer once price is back above this blue line. Now, let me show you a little bit when you dig a little bit deeper, right? So, we can go to the 1 hour time frame here. Since price is coming back above this blue level, this is actually when I just saw price not too long ago. It was like earlier today. It was like right around this time when I seen price doing this thing and I got into a trade for a buy. And the reason why I did so is, as you can see on that 4 hour time frame, price was correcting. But I started to notice that price was picking up on the 1 hour time frame. And how I told you guys in the last video, I'm going to teach you guys when it comes to time frames, you gotta make sure everything is aligning with each other. So 4 hour time frame, if we go to the 4 hour, we can see that price has a new high in the market. Price went on a correction. So when I seen price, this already happened. So prior to that, I've already seen price break above these lower highs. So these lower highs were broken. This is an indication for the 4 hour. So all I did was go from 4 hour to 1 hour just to get a little bit more information of what was going on. Get a little bit more information of what's going on, and I can see where I was trying to buy price was coming back above that level, right? Price on the 1 hour time frame was coming back above a level where sellers who are pushing price down. Here, we have a small sell up here. We have a sell off over here. Price was pushing back above that level, right here. So, in my head, I'm thinking like, okay, the price is bullish on the 1 hour, bullish on the 4 hour. This is a great opportunity to take a buy. So now we got a good push up earlier, created a new high. This created a new high in the market. This can also be looked at as a new indication, a pullback, and now price is looking to continue to go higher. And it's just literally a rinse and repeat. If we go to the 4 hour, you see the same thing, where price has a high, higher low, higher high, higher low, looking to make a higher high. And that's the way that I'm thinking about it. So remember, ICC, all ICC is, and you can write all this down if you need. All ICC is, we have the indication, which is a new high or low. We have the correction, which is a pullback, but this is a higher low or lower high. And then we have the continuation, right? And this is finishing with a, let's just say new higher high or lower low. Right? This is all ICC is. Indication is when price makes something new. The correction is when price is making a pullback, is making a higher low or a lower high. A continuation is finishing out what it started. So if price made a high, boom, indication right here. Breaking, indication. Correction, higher low. Boom, back above here, we enter. We're taking it, so it can either come to this high or make a new high. And then the trend continues. Alright, so that is what an indication is. The people that need help on indications, I think this was probably by far my most broken down way that I've explained it. But currently right now on gold, we are looking for price to, right now price is kind of doing this thing. We had a good day. There was a new high in the market earlier this morning, so I'm pretty happy about that because that means that price is still looking to push higher and higher. We had a small correction. Some people think this was selling off. Weird. They would think that. I think everything's okay until price breaks below like these levels. So if you look on the 4 hour time frame, we're literally sitting like this. High, higher low, high. So price can play all in this area as it wants, as long as it doesn't break below here.
If you love losing money in trading, please don't get a funding tips account because traders here don't risk their own cap. They trade funded account.
Hi guys, so today we're going to talk about corrections. A lot of people get this one confused or they mess this one up a lot. So I'm going to break it down in my best abilities. But me personally, as long as you make sure that everything is aligning whenever you are switching time frames, because this would require you to switch time frames to understand how a correction is going to be over. There's no way you can tell when a correction is going to start, but you can definitely tell when it's going to be over. So that's what I'm going to explain today. And currently I'm already in a trade, as you're going to see. I'm currently in a trade and floating $2.2 million. And this is gold buys. And I was talking about this on the Telegram 2 days ago. So make sure you guys are in the Telegram to make sure that you guys are just getting my updates whenever I am posting in there, and just keeping up to date with what life has got. But yeah, with that being said, make sure you guys like and subscribe, and I'll see you soon. Love you guys.
Alright, so today is going to be about corrections. When it comes to corrections, this is pretty self-explanatory. If the indication, if we have Indications, which is a higher high, and then a lower low. The corrections is going to be lower highs and higher lows. So when it comes to both of these, I want everybody to understand that all you're doing is basically waiting for price to make this lower high and higher low. So in this scenario that I'm going to show higher lows. All you're doing is jumping from the 4-hour time frame. So you're identifying the trend on the 4-hour. This is to identify, so ID. Let's just say identify. And then the 1 hour is to basically keep up with structure. So this is like taking tabs and just making sure you are knowing what trend we're on, seeing the flow. This is all let's just call this our flow, right? So first is to identify, then it's our flow state, and then 15-minute time frame is to find the details. So this is going to be the small details that end up making up everything else. So in this scenario that I'm going to show, you're going to see me come from the 4-hour time frame to the 1-hour time frame to the 15-minute time frame. And as we can see, let's go ahead and delete all this. So I'm currently in this trade, as you can see, at 4,534. So I'm going to go ahead and mark that where I'm at. We're going to come here. Like this, we're gonna go 4,034, so I'm right around here. Put this right around here so I can show you guys. So, when it comes to basically understanding what market structure is or what the direction is, it goes back to trends. So if we know we are in an uptrend, we know that all we're looking for is a high, a higher high, or a higher low. Those are the only things that we're worried for. Higher highs, higher lows. So in this scenario, we can see that price makes a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So our main objective for corrections is basically spotting out the indication. So our first and foremost, spotting out indications. And remember, indications can only be higher highs or it can be a lower low. So in this scenario, we're marking our higher highs. So what I did was, and I'm gonna pull this up too so I kind of have a reference to go off of. If you are not in here, make sure you click the link down below to join this thing. It's for free. So it's a Telegram where I basically tell everybody what I'm thinking, what my thoughts are, what the market is looking like, and just overall an update. So as you can see here, on the 4-hour time frame, I'm telling people that price on the 4-hour has already made a high, and now this is the correction. Now, I don't necessarily need to be on the 1-hour to see it, but I can see that price went up high, and now it is selling off. But for reference, this is what the 1-hour looked like. 4-hour made a high, but the 1-hour started downtrending, and this is where the correction starts. So all that happened right here. So let's break all this down. I don't know if I can delete this. Break this down right here. And then remember my entry came from right around this level. So 4-hour makes a high, 1-hour starts correcting. We go to the 1-hour time frame, and we see that price is making a low, lower high, lower low. And the thing is, this means is, oh, the trend is going back down or it's starting to downtrend. But remember, the 4-hour made a new high. So let's not disregard what a higher time frame has already done. Most people disregard what the higher time frame done just because what this time frame is doing. But in this scenario, higher high was made. As you can see, this is the high, higher low, higher high. So back to 1 hour. Once we go back to the 1 hour, we can see that price is staying stagnant here on the support level. So staying stagnant on the support level. So what we would do from here is jump down to a 15-minute time frame and monitor price. So most people kind of look for the ICC because all you're doing is really looking for ICC on a smaller time frame for the correction to be over. So once again, I'm gonna say it like this: a smaller time frame to see when the correction is over. Right? So this is the only time you would need to be on the smaller time frame is for the corrections, right? So most people kind of are on the smaller time frame just for or the entry, which you can do that, but most people need to understand that everything needs to align with each other. So what I'm going to explain is basically everything aligning for the greater long-term play. So from the 1 hour time frame, jump into the 15, understanding that the 1 hour, this right here, what we're seeing is the 1 hour. So this is a candle right here, and then this was a candle here going back up, and then this was a candle to make that lower high. So once again, I took 1 hour, you can see that this was that candle back up, candle back down. So not to get confused on the 15-minute time frame, because you already should understand what's going on. So 15 minutes is to a level of support, picks up this level of support, stays stagnant here, ends up making a high. So in between these two levels on the 15, price is deciding if it's going to go up or down. But right now it would be in a no trade zone. Alright, so this will be in the no trade zone. Anything above or anything below these levels would determine what type of trend the 1 hour is going to be on. Since the 1 hour is already on the downtrend, we can see that price is neglecting or not even trying to go back down anymore. We would want more lower lows in this scenario, but price ended up making a low, making a lower high, and failing to go lower. So that's already a plus for us, but what we need is price breaking and making new highs. So as you can see here, price is pushing up bit by bit. So you can see here, price has a high, higher low, he builds up a little bit, and then sells back down, but still maintaining this level. So price is no longer going down, but it's also not going up too, until we have a push down, ended up wicking out, this wicked out, and then price pushed back above this level. So in my head, as you can see already over here, I've entered based off of price making that